Well, many homeowners who are struggling to stay current on their mortgage are wondering what governmental programs are still available to help them, especially after the talk of spending cuts. There is good news because it appears that the programs designed to help homeowners refinance an existing loan are still in place as long as you qualify. Let's talk with Week News real estate expert Denny Grimes about these. This is HARP. I can't remember what it means right now. A program that's been around and is still there.
Yeah, it's a home affordable refinance program, and it came out a couple of years ago, and we reported on it because we thought the folks ought to know, but for us it didn't really apply because they had a limit of they would refinance if you qualified up to 125% of loan to value. And so banks never like to loan more than the home is worth, and this program with a government assistance would go up to 125. Well, we would yawn because our market fell 60%, so it didn't help many folks here.
We weren't quite in the category there it could benefit.
No, but they've changed the program. Now it'll go up to 150%, which helps a whole lot more, and our market has risen in a lot of the price ranges. So that gap is now narrow, and a lot of homeowners can get into this. And one of the reasons I wanted to talk about it this morning is the fact I ran into a lender from Fifth Third, and other lenders may do this, that if a customer of Fifth Third refinances with Fifth Third and they qualify, there's no limit on the amount of refinance.
Well, that's a great deal.
As long as it meets the kind of a drive-by appraisal, and it is. So we have some qualifications. So the first thing a homeowner should do is check and find out if they have a Fannie Mae or Freddie Mac mortgage. And the best way to do that is I've got a couple of numbers up there, or you can Google the question and go online, just put in your name, social security number, and it will tell you if you qualify.
Got to be one of those two.
That's right, number one. Number two, you have to have a loan that it was originated prior to 2009. It can't be after that. And you can't have used the HARP program before. And here's the kicker. You can't have a 30-day late in the last 6 months and only one late payment in the last 12 months. So
you basically have to be current.
You have to be current. So if you're like 6 months or 2 years or 3 years behind, don't go for this program. There may be another one for you. And what's also really pretty cool about this is FHA and conventional. So if you have an FHA loan in a $400,000 range or a conventional loan as high as $750,000, you can qualify for this program. So it covers the majority of our homeowners. And the mortgage balance, you have to be at least 80% loan to value or greater.
And for some families that are right on the edge, you say this can be a big difference. I mean, they can get the refinancing in $300 or so, maybe more. That's the difference, between food on the table or going to the doctor.
That's right. If a $200,000 mortgage is refinanced at today's rates versus a couple of years ago, that would be a savings of about $300 a month, and that could make the difference of keeping that home long term or struggling and maybe losing it.
All right. So I asked you this question just a minute ago before we started, but what if you're underwater, not in trouble? Can you actually refinance today?
Underwater. Well, if you're underwater, you can refinance, but you can't refinance without governmental help because most lenders are going to do an appraisal. And as soon as they see that appraisal value is less than the loan amount, they're not going to let you refinance. And most refinance programs only do 70% of loan to value, not 100% loan to value, let alone 150% loan to value. So a lot of talk was over the last six months about spending cuts. The good news is from real estate assistance to homeowners, it's pretty much status quo, if not improved.
At least it's still there. Go get it if you need it. Thanks, Denny. Appreciate your help. We're right back after this.